For the tech sector, it seems the pandemic giveth and the aftermath taketh away. The Meta CEO's letter to his employees sums up the driving factors behind the mass layoffs across tech firms. Ironically, in February this year, Amazon had more than double the cap on base cash compensation to its corporate employees while citing competitive labor market. So why had tech giants stepped up the hiring in first place?
Mass adoption of digitalization, which became the prime agenda for all the organizations. We were working remotely, we were learning remotely, we were buying remotely, and the kind of transactions that went up is the reason why there was a need for digitalization for organizations across sectors we're talking. As a matter of fact, that led to the spike in hiring and identifying people with those digital skills. And as I said, while the demand kind of increased, we also saw that the skill gap, which already existed, kind of also widened.
But all that changed as rising inflation, increasing interest rates, and an unforgiving stock market made companies look for efficiency. It is not just Meta that is looking at becoming capital efficient. Earlier this month, Elon Musk-led Twitter fired 90% of its staff in India. Alphabet, the parent company of Google, and Microsoft have already sent messages that focus will be on increasing productivity. Microsoft, during the company's Q1 results, also said that headcount addition from Q1 to Q2 would be minimal. Gaurav Vasu, founder and CEO of Unearth Insight, says the layoffs are part of a course correction and should not be called a bust for the IT and tech sector jobs.
The layoffs are not in tune with the kind of growth that happened. So it's not fair to say that it's a bust as of now. So it's a combination of internal factors of improving profitability, optimizing the internal bench, right sizing, and not overhiring in a global recessionary scenario where they may have to get into a situation of right sizing like the global product firms are doing. That's what's happening in India. Even globally, you might see Microsoft, Amazon, or many of the others, putting freeze on hiring. That's a combination of demand pressure that's coming in for their products and services, and also the right sizing activities that they're running. So it's only a smaller amount of the headcount which is affected, not the entire ecosystem at large.
Sumit Kumar, the Chief Business Officer at TeamLease, agrees. He believes the layoffs and hiring freeze are symptomatic of a rationalization of demand for talent.
So I would not say that, today the need for digitalization has slowed down. I would say that the pace is now kind of rationalized with the demand that exists in them. And I would not say it's just a remodeling the business. It's also that's the reason how even the investments are getting more, aligned to it.
What about the startup segment though? Will it be correct to claim that the recession fears plaguing Western markets as well as the need for becoming capital efficient that drives the hire and fire situation in major tech giants is also evident among startups? Vasu believes the correlation is much more complex.
So it's not really the layoffs that are going to aggravate because the two don't have a direct correlation as such. Yes, there is an indirect correlation when you look at, or there is a sort of a direct correlation if you look at enterprise products, right? So as Facebook of the world or Twitters of the world or public listed companies, if they start getting into a consumer crunch and they start having an impact on their profitability, their ability to buy B2B products, which the Indian startups are selling, right? That also gets a bit impacted, right? That's where the SaaS and the enterprise startup ecosystem also gets crippled by these global demand challenges. So the factors are very simple. The factors are the credit crunch, the rise in interest rates, the valuations being at all-time high, and that needed a correction because the exits were not supporting the valuation. And I think the third challenge, if you look at where the VCs are being a bit cautious, is the fact that next 2 years are looking a little challenging. Now, when the next 2 years are looking challenging, startups' ability to sell their products and services, especially the B2B to enterprises, both public and private enterprises in India or the West, that does get impacted.
Ultimately, as the IT sector looks to course correct and switches to a cautionary strategy for the next few quarters, job seekers also need to optimize and strategize, explains Kumar.
Even the other individual needs to be little wary or conscious of the organization that they're joining, that what's the kind of investment an organization is making to upgrade them, or constantly, in their talent development. And I think everybody needs to keep investing in themselves so that they remain relevant for that job roles.
Experts do not believe the tech and IT sectors paint as bleak a picture as the recent mass layoffs and hiring freeze. Instead, the complex weave of factors governing such decisions for the tech majors as well as startups point towards an evolving job market. While the dominant mood might be that of caution this quarter, market experts suggest it's only temporary and will rebound.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.